What are choice vouchers? Choice vouchers are part of a HUD program that helps low-income individuals afford housing by paying a portion of their rent. Significant federal legislation. What does the Truth in Lending Act, TILA, require? TILA requires full disclosure of the terms and conditions of credit. What was the purpose of the Real Estate Settlement Procedures Act, RESPA? RESPA eliminates kickbacks and referral fees among settlement service providers to make real estate transactions more transparent. What is the Community Reinvestment Act, CRA? The CRA was created to encourage financial institutions to help meet the credit needs of communities, especially low-income areas, in response to the practice of redlining. What did the Housing and Economic Recovery Act, HARA, address? HARA addressed the subprime mortgage crisis and included provisions like the Safe Mortgage Licensing Act. What did the Dodd-Frank Act do? The Dodd-Frank Act created stricter regulations for the financial services industry to protect consumers and prevent another financial crisis. Agricultural lending programs. What is the USDA Rural Development Program? A program that provides financial assistance to help improve the quality of life in rural communities through affordable housing, business loans, and community services. What is Farmer Mac? Farmer Mac is a government-sponsored enterprise that provides a secondary market for agricultural loans, helping farmers obtain financing. Closing Disclosure Form Breakdown. What is the purpose of the Closing Disclosures Page 1? Page 1 provides a summary of loan terms, transaction details, and cash to close. What should be checked on Page 2 of the Closing Disclosure? Page 2 itemizes loan costs, taxes, prepaids, and escrow payments. What is explained on Page 3 of the Closing Disclosure? Page 3 compares the loan estimate in Closing Disclosure and shows any changes to closing costs or loan terms. What does Page 4 of the Closing Disclosure describe? Page 4 provides information on loan features, such as adjustable rates or balloon payments, and details on escrow accounts. What does Page 5 of the Closing Disclosure include? Page 5 lists consumer rights and responsibilities and offers contact information for resolving questions or complaints. California legislation and home buyer assistance programs. What is the Unruh Civil Rights Act? It prohibits discrimination in business and housing in California. What is the Holden Act, 1977? The Holden Act addresses housing financial discrimination in California by regulating discriminatory lending practices. Name 2 programs to assist home buyers in California. CalVET, California Veterans, and CalFHA, California Housing Finance Agency, offer assistance for home buyers. 1. Secondary mortgage market process. 2. Mortgage-backed securities, MBSs, and interest rates. 3. REMICs and CMOs. 4. Government-sponsored enterprises, GSEs. 5. Federal Housing Finance Agency, FHFA. 1. Secondary mortgage market process, flashcard style. What happens when a consumer applies for a home loan? The local bank issues the loan, but sells it to institutions like Fannie Mae to free up capital. What does Fannie Mae do with the purchased loans? It packages them into mortgage-backed securities, MBSs, and sells to investment banks. Who earns from a consumer's mortgage payment? The bank, Fannie Mae, investment banks, and MBS investors all get a cut. 2. Mortgage-backed securities, MBSs, and interest rates, flashcard style. What are the steps in the MBS process? 6. Banks issue and sell loans. 7. Loans are bundled into MBSs. 8. MBS shares sold to investors. 9. Monthly payments flow through to investors. What happens to MBS investors when interest rates rise? They benefit. Higher rates mean higher returns. What happens when interest rates fall? Investors earn less, as new loans carry lower interest. 3. REMICs and CMOs, flashcard style. What is a REMIC? A real estate mortgage investment conduit, a tax-advantaged vehicle that holds MBSs and avoids double taxation. Why were REMICs created? After the Tax Reform Act of 1986, to provide tax benefits for mortgage investors. What's a CMO, collateralized mortgage obligation? A type of security made up of mortgage loans or MBSs, split into tranches based on risk. What role did CMOs play in the 2007 financial crisis? They were packed with high-risk subprime loans, and when borrowers defaulted, the system collapsed. For government-sponsored enterprises, GSEs, flashcard style. What are GSEs? Privately owned financial institutions created by Congress, e.g., Fannie Mae, Freddie Mac, Farmer Mac, FHLB. What benefits do GSEs receive? Line of credit with the U.S. Treasury. Exemption from registering securities with SEC. No state/local income taxes. What is their mission? To make borrowing easier and more affordable, especially for housing, farming, and education. Are GSEs government entities? No, they're private, but backed by the government. 5. A Federal Housing Finance Agency, FHFA, flashcard style. What is the FHFA? A federal regulator overseeing Fannie Mae, Freddie Mac, and FHL banks. Why was FHFA created? In 2008, to manage the aftermath of the housing crisis and take conservatorship of Fannie and Freddie. What powers does FHFA have? Regulates loan limits for conforming loans. Sets oversight rules for secondary market players. Sued financial institutions for MBS misrepresentation. Mortgage bankers versus mortgage brokers. What does a mortgage banker do? Funds loans directly, handles the entire process, offers fewer loan options, and stays involved long-term. What does a mortgage broker do? Acts as a middleman connecting borrowers with lenders, offers more loan variety, exits after the deal, earns via placement fee. Credit unions and real estate. What is a credit union? A non-profit, member-owned institution offering flexible personal and mortgage loans, regulated by the NCUA. What did the Credit Union Membership Access Act of 1998 do? Allowed credit unions to expand membership eligibility, fueling sector growth. Commercial banks and mortgages. What are commercial banks' main funding sources for loans? Demand deposits, e.g., checking accounts. What types of real estate loans do commercial banks provide? Traditional mortgages, construction loans, home improvement loans, manufactured home loans, HELOCs. Life insurance companies and real estate. How do life insurance companies invest in real estate? They fund large-scale, long-term projects like malls or office buildings and use participation financing for partial ownership. Why don't life insurance companies invest in single-family homes? They prioritize long-term stability over liquidity and prefer larger, less risky investments. Mutual savings banks. What are mutual savings banks? Depositor-owned banks, primarily on the East Coast, focusing on conservative, local, long-term real estate lending. Where do mutual savings banks invest? Primarily locally, though they may invest outside the region through mortgage bankers when needed. Bonds in real estate. What are municipal bonds? Government-issued, tax-exempt, low-risk bonds used to fund public projects. What are corporate bonds? Business-issued bonds for funding projects may be secured with collateral or unsecured debentures. What are coupon-bearer bonds? Old-style, unregistered bonds where possession equals ownership, now rare due to theft and fraud risks. Living and testamentary trusts. What is a living trust? Created during the trustor's life to manage and distribute property, avoids probate. What is a testamentary trust? Created after death via a will, subject to probate and its costs. Land trusts. What is a land trust? A trust holding real estate only, offers privacy, control, and probate avoidance.